All right.
Should I go Facebook Live? All right, turn on Facebook Live.
Okay, I think we're live.
How's everybody doing
Awesome.
today?
Hello, hello. All right, let's
How are
see if
you?
we've got people that can hear us.
All right,
I'm
so
so
I have
excited
moved
about
over
today's
to
show too.
Facebook Live in my office.
All right, hang tight. Let's put you on. Yay! All right, guys, let's see what we can see.
Real
I'm
Estate
trying.
Saturday?
I don't know if this is even working.
Are we in Never Never Land right now?
Oh, there we are. All right. Hey, everybody. Happy Saturday. I'm so excited. We get to do a little bit of an update here with my buddy, Jeremy Poling from NFM Lending. He is a loan officer, and he has a plethora of knowledge that I'm excited to tap into, especially in today's climate. So let's get to going. Hi, Jeremy.
How's everybody doing today?
All right. Can you guys see us okay? Feel free to chime in. We're doing a little bit different with all my equipment, trying to figure that out. So there's a little bit of feedback in my audio. So just bear with me, guys. All right. You ready?
So this was the alternative versus sitting in the office with mask on, and both of us trying to talk with the mask over our face, right?
Buddy, wait, don't we have a month and then May 15th and then no more
I mean,
masks?
I don't know. I mean, personally, I was going to shave a mullet into my hair tomorrow, but now I'm thinking if they open us up quickly, I don't want to be the guy on the street with a white beard and a mullet. You know what I mean?
Oh my God, that would be hilarious. We should take bets. We need to do some type of bet so that you can lose and I can win and then you can do that. I think that would be the best thing.
I am fully
All right, come on,
vested
we have to
into
quit it.
that.
We have to quit it. Come on,
That
we
idea.
do this all the
Absolutely.
time. All right, let's get into it. Good afternoon, everyone. Thank you for watching. I am Rachel Smith, a local real estate agent in the Frederick County area. We have Jeremy from NFM Lending on. I'm going to ask him a gamut of questions, and he's going to answer them decisively, and we're not going to have a lot of fluff in between like we usually do, right?
Right. We're going to try to keep it short today.
Let's get to it. All right. So I really wanted to get some financial aspect input from the real estate industry as to what's going on right now. Obviously, everybody's going through it. Everyone's going through different situations with the COVID-19 situation. And, you know, really, we need to talk about some mortgage business, what's happening. So let's start first with the very famous question of what are the rates currently doing? So what's happening with the rates?
Everybody wants to know what the rate is, right? So to kind of preface that conversation, first I think it would be wise to talk a little bit about the state of the mortgage industry as a whole right now, because I've heard from a ton of realtors that some of their lending partners have actually shut down. They're freezing programs. They're not able to offer some of the same programs that they once were just a few weeks ago. So there have been some pretty significant changes over the last 2 weeks. There have been some pretty steep margin calls across the board with some of the nation's largest warehouse lenders
Yeah,
and
that's a good way to put it, warehouse lenders.
Exactly. So these folks that are dealing with these liquidity issues, unfortunately, to put it in layman's terms, right? Rates dropped late February. March 2020 comes along. You have your regular business that's coming through for the spring market, which was heating up early.
Yep. It was crazy.
Refinance rates dropped, below 3%. The industry goes crazy. All of these locks then, are clogging in the pipeline, and basically it did not have time for the market to digest all of the business that was coming through, right? Especially at some of the rates that were being offered. And not to say that investors out there weren't offering these mortgages. It's just when you're sucking up a lot of that liquidity and you're selling that at sub 3% rates, there's just not a whole lot of meat left on the bone for investors.
That's a good way to put it.
Combine that with what we have going on globally with the pandemic and some of the hysteria within the global markets, more importantly, the United States, the Dow Jones, it kind of created the perfect storm. So yes, investors
that's
have
a good way to put it.
Investors have pulled back. I mean, the good news is, I'll start with that first, is the market is actually digesting the refinance business that's still coming through. Rates are still very low.
Yes.
Liquidity is coming back to the market. So, with the news of some states and governors now choosing to reopen their states, we are getting a little bit of ease on some of the restrictions, uh, again, industry wide, in regards to these programs. I can talk a little bit about NFM specifically, but it's probably going to be different case by case with different lenders, as you start to look into Q2 or second quarter 2020, even on to Q3 and Q4.
Yeah.
There are some pretty strong predictions that the real estate markets are going to continue with this upward trend, very healthy. It's just basically getting folks back to work,
Back to
getting
work.
our
Yeah.
global markets, getting our stock markets, getting our bond markets to stabilize, and open, our country back up again. So to answer your question right now, rates are still very low. I mean, I'm able to offer FHA, VA, USDA, all of the Ginnie Mae backed securities that are
Okay, good.
government insured or government guarantee loans. Um, there's just
Yeah,
a
because
different
that's
cost.
not to cut you off, but that was my next question as you start to make segue into the government backed loans with
Mhm.
FHA and VA and the like. I'm seeing different posts and hearing different things from all over about now the qualification is getting a little bit tighter. Now these government backed loans, the LOs and of course the lenders, they want to see higher credit scores. The DTIs are getting a little bit tighter. They're tightening up a little bit. Have you seen any changes with that thus far on your side of things where you're seeing these government backed loan products that
Yeah.
are getting a little bit more scrupulous?
So it's not necessarily just government backed, but let me just explain, right? So
Thank you.
in the climate that we're currently in, when folks are not at work or they're able to defer mortgage payments, the mortgage servicer basically is absorbing that gap between those payments. It's not the government that's absorbing it. It truly is the mortgage servicer. And with folks not working, with folks that are either laid off, or have been completely let go, hours being reduced, default rates increase. So to counterbalance those default rates, basically what they have done is become much more constringent in how they're lending money during this period. This is only a temporary period. There's no directives that are out there specifically changing the guidelines. It's just how the investors want to buy the security.
Five.
So
Yep. Okay.
I want to make sure everybody knows federal
Thank you.
guidelines haven't changed. It's just the investors that are buying these mortgage-backed securities, once they make their way to Wall Street, they've changed the appetite for what they will do,
Yeah.
right? So they're just trying to curb as many of these first payment, second payment, these inside of 18-month default rates that we see, just because, again, global pandemic, people are laid off, people are
Yeah.
reduced hours, people are deferring payments. I mean, they're trying to keep the housing industry stable as possible,
Strong.
because, again,
Yeah.
it is one of the main pillars to recovery within our
Absolutely.
nation.
Absolutely. Absolutely. And then again, segueing into my next question, we're seeing a lot of different questions and statements about deferments and forbearance, things like that for people that have been laid off. They may not be in a strong position to make their payments. What are you suggesting if you have clients that have been in that situation, homeowners that just can't make their payments? What options would you say that they have, and what are red flags also that homeowners should watch out for? Because you see a lot of these posts about
Yep.
forbearance, and then, hey, you know what, be careful because that, you take 3 months off, they're going to tack it on. That fourth payment's actually going to be 1, 2, 3, and 4, so 4 times the typical monthly amount. Is that something that you kind of want consumers to be forewarned over, or is that something that could be a valid option for homeowners?
So I would say 80% of my refinance calls that are here right now, just to kind of back up, my business has always been about 80% purchase, 20% refinance. I really don't market a refinance business. We're about 50-50 right now, 50% purchase, 50% refinance. And out of
Wow.
those refinance calls, 90% of those are asking, what is my next step? What are my options? And it really is case by case, right? Are you still
Yeah.
back to work? Are you still at work? If you're still at work and you can make the payments, even though this is offered to give you a little bit of easement, And regardless, always read the fine print.
Always,
Um,
yeah.
we're helping a lot of families go through a traditional refinance that inadvertently lowers their rate. They're allowed to skip 45 days of payments and before their first payment, so it gives them a little bit of an ease there. They're allowed to roll their closing cost into the new loan, and they receive a refund for their current loan servicer's escrow account.
That's
So it gets
401ks.
them a little small injection of cash
And you
into
know
their
what? I didn't
pocket.
think, I now that, because we talked about this and just, from experience, yes, you're not making that first payment until, the next month, but and all those other things that you mentioned, but I didn't actually put two and two together to think about that you would get a refund from those escrows.
Mhm.
Is that how that works? Sorry, he's
Yeah,
down
so
here
you
on
get
my
a
screen.
refund, and depending upon when you close in the month, I mean, you have the option to skip up to two payments. You can build in the odd
Skip
days
up to
interest
two.
into the loan to miss two payments. But again, you read the fine print, and for those families that actually aren't at work, that don't have savings, or don't have resources to make that payment,
Which
where
is a
the
85% of
you know
America.
the deferment may be the only option that they have,
Yeah.
make sure that you are reading that fine print and you have a plan going into coming out of that deferment period, because I've seen these agreements so far. I've seen probably three to four different variations. One where they're putting it onto the principal balance of the loan, and you're just basically paying double interest on that money until you're either paid
Done.
off of that loan or you refinance.
So there are
Second
some
is,
options, and I think primarily the best thing is to talk to a professional that knows the right
yes,
avenues to go.
yes, because one of those, and I will, be short on that, is the fact that you brought it up. Some that are deferring these three payments, and at the end of the 90-day deferment, the fourth payment will actually accelerate collection of all four of those payments. And they're basing that either upon government stimulus, going back to work, um, anything that allows you the ability to make that payment. But again, some families out there may not have the ability to do that. So take a look at that, figure out what your options are, and always talk to a professional.
Professional about it and get some sound advice in that aspect.
Absolutely.
So then I guess this would affect purchase and possibly refis as well. We're also seeing some information out there that 401ks, Roths, IRAs, and all kinds of um, all of those are waiving fees. Is that
Yes.
correct information that right now they can access retirement fund accounts and things like that and still get what they want and not have to pay the typical fees that are associated with withdrawing that money?
So yes, and this is a very, 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 very good question. Normally, our buyers are using 401k loans where they're paying back small increments over a very long period of time, where they don't feel that money really hurting them as bad because it's coming out of their pre-tax dollars on their payroll. There is a second option though, where you actually liquidate or withdraw a certain amount out of 401k, which traditionally they have penalties and fees for those. Yes, very popular right now. I will tell folks, if at all possible, try to avoid that, because looking at your current statements while we're in a down market, you may think, oh my goodness, my 401k, I'm losing money. Um, just remember that on the upside of these natural disasters or these moments in history, going all the way back to the Great Depression in the 20s,
Yeah.
the market rebound 18 to 24 months following any of these major events in life, the upside, the vertical has always increased, almost, 15% on average. So
That's
long-term
amazing.
goals, if you're already vested in your retirement, take a look at it. If you do want to become a homeowner and it's your last option, great opportunity without fees. But there are some
Exactly.
other
That, and
programs.
then you're still taking advantage of the lower rates that are available right
Amen.
now.
Yeah, I mean, interest rates right now are 3%, low 3%, 30-year fixed.
That's awesome.
Those are for qualified buyers. I mean, those are very, very low rates, and you're able to qualify for much more home. Keep in mind, state of Maryland still open for business, so down
True.
payment assistance through the
Yeah,
Maryland
I mean,
Mortgage
I've got
Vertical.
showings and just a little bit. Had two closings this past week. One, I think we're going to be closing. We'll see.
Yeah.
this upcoming week or the following week. So no, I mean, we're still in business. We're I don't want to say we're doing business as normal, right? Because we're not doing business as normal. We're doing business a little bit differently. We've assimilated to what needs to be done in order to respect these guidelines and
Right.
still carry on the way that we have been. I mean, I think we all have pretty good experience, everyone in the real estate industry already, from doing things electronically thus far, just because we do a majority of our things electronically already. So I think where I've seen some changes is just when I do come into contact with people, you know, we have to wear masks and gloves and just being a little bit more conscious of
Right.
all of that, which is really hard for me because I'm such a people person. And all I want to do is hug everybody. I mean, that's why I got into real estate, is because I love people and I love that interaction. So it's definitely been hard for me, and I'm going through withdrawals of people and hugs. But like you said, we're still operating from a real estate industry standpoint. And I think, and I don't know what you think, but I was going to ask you this as we move forward for the rest of 2020. What is your prediction of the housing market and what's going to happen? Because we're already having a little bit of an issue with inventory where, you know, yes, we've got these killer rates. We've got buyers out there that are ready to go, but there's just no inventory. And I think that's something that I'm seeing in my realtor standpoint. What are you seeing from your mortgage standpoint?
So, first off, yeah, stay safe, right? So as far as, you know, all of our referral partners, our title companies, our settlement agents, home inspectors, home appraisers, mold inspectors, our realtors. I mean, I've reached out to a lot of my partners, reach out to you. You've told me, no, you're pretty much set, but I've tried to stockpile and provide as many folks that I can, you know, hand sanitizer, gloves, you know, mask, anything to keep them safe, because we are pretty much on the front line. So moving forward, I think that this is going to be a conscious effort that we all have to take to kind of protect ourselves and protect one another until we actually get a little bit more information around what this superbug looks like. As far as the inventory, right? If you want to really have some mind-blowing conversation, go back historically over the last 4 weeks in the Bright MLS system and look at the total number of new listings, total number of available listings, and then the actual number of contracts. So in a healthy market with normal buyers coming and going, we would literally be inside of a 2-month supply.
Yeah, 2 months.
However, purchase contracts have come down and buyers have pulled back a little bit.
Yeah.
So it's kind of offset that. But again, if you have, you know, our county here in Frederick, Maryland, with, you know, 500, you know, listings in total, and you have, you know, 60 contracts being written every week, or 60 that are going under contract, you can see that we're still in need of inventory. Folks that are looking to buy and sell. I mean, I just had both of my neighbors put a for sale sign in their yard.
They won't last long. I know where
They're gone. They're already gone.
Oh, are they? Okay.
Yeah, they're already gone. So people are out there buying homes.
They are, and they're ready, and they're executing. We're still seeing multiple offer situations. We're still seeing properties fly within a few days. And then as we're talking about stats, I'm going to switch screens real quick just to give a little bit of insight. I'm thinking this will work. Bear with me with all of my equipment. Let me check and see if it's coming up. There's a little bit of lag on our live. However, on Mid-Atlantic TV's live. So I'm just checking to make sure. So this is the Maryland housing statistics. Not enough caffeine this morning for March of 2020, right? So they just rolled these out, and I think a lot of people have seen these on posts all over Facebook. There we go, came up. So let's talk about it. I'm sure you've seen this, Jer, a lot. So it's a comparison between March of 2019 and March of 2020. And if we just go down these images real quick, we're still seeing a positive change of 2.5% as the units that have closed as opposed to 2019. Same with the average price has actually gone up 9.3% change.
That's a big thing, and I want you to pay attention. So we're going to come back to that whenever you're done with that.
Yep. Yeah. So you probably can't see it on your screen, but I'm scrolling and you'll be able to see it on ours. So, and then we've got an almost 9% positive change in the median purchase price. Pending units, though, this is where things go down. Our pending units go up, but the inventory goes down.
Right.
In 2019, we had 27,000, a little bit more than 27,000. JR, right now we have 15,000. So, I mean, that's a pretty significant difference. And then the months of inventory.
That's that counterbalance I was just referring to.
Yep.
Right. So if you have property values going up, you still have people that are signing contracts, are out there house hunting. Rates are very affordable. So this time right now, this one's going to blow your mind. So where we are with rates right now, April 18th, 2020 versus rates in April 18th, 2019, you're probably a good 0.75% lower than where you previously were. So a $300,000 home buyer buying that same home right now versus 1 year ago is going to be somewhere, around $150 less in monthly payment, maybe even a little bit more, depending upon their down payment. So you're buying more house for less money right now.
Yeah, it's incredible. Yeah, I mean, and that's how I explain it with some of my buyers too, is, you may have qualified for example, 200 this time last year, but now you're going to qualify for 250 because of that decrease in rates. Is that accurate to tell them that type of information?
Yeah, I mean, obviously it's hard for you as a realtor to kind of quote rates, just like it's hard for me to
don't.
But at the end of the day, kind of circling back to that statistic you just talked about, home values, and this is a great sign of a healthy market, right? You have supply and demand, right?
Yes.
Supply is not there, so demand is higher, right? Once we kind of get that to balance out, and we have the low rates that we have, that's why I believe Q2, if we can open up the United States here in a timely fashion, but there'll still be some of those numbers skewed just because we're already looking down the barrel, being at the end of April right now.
Yeah.
But Q3 and Q4 of 2020, we get back to normal business. Probably is going to be one of the more healthy real estate markets, not only for buyers, right, with these lower rates, but also for sellers that are able to list their homes for, say 2 to 3% year over year higher than we were last year. So it's kind of a give and take, right? You're getting lower rates for the buyers. Sellers are still able to sell their home and not take a bath on their sales price. So
exactly. Well, I mean, that was the other, dang, now of course I have to take it off. Where did I put it? But it was another little, there we go. So the average sales price to original list price ratio, guys, I'm going to jump back to the screen real quick, so bear with me because I think I did this right. And nobody mind my Saturday attire either. So I think this came up. So look, average sales price to average list price ratio in 2019 was 96.8%, whereas this year it's 97.7%. So even that's going up. Now, I know there's a little bit of an argument of, hey guys, these March closings, that was from contracts that were already in place from before this all went down, right? So we're really going to get to see, we're really going to get to see what happens when April stats roll out and even May stats roll out. So I think that will be really cool to watch and see what happens in that aspect. What do you think is going to happen?
Yeah, but keep in mind, right? So most of these lenders that are out there, and again, I'm speaking for NFM lending, right, where we are a purchase-driven relationship-based direct lender. We're still a 30-day or less closing on all purchases. So you're not going to really have a lag in that data, as most loan servicers, most loan origination companies that are out there are pretty much on that same timeline. So I don't think you're going to really see a lag in that data hitting. It's just going to be, as the weather gets nicer, we start to put more people back to work, the doors open up, you're going to see a vertical, I believe, that leads us all the way through to 2021. Now, keep in mind, folks, we have a global pandemic. We have national debt issues now because of some of the stimulus that we provided. We also are staring down the barrel of an election. And I don't want anybody to forget that within the next 6 months that we're going to be sitting, at the polls, hoping that this doesn't have an effect that will maybe sidetrack some of the progress that our markets have made, our equity markets, right, our stock markets, our bond markets, things of that nature. But so it always gets a little bit turbulent in those election years.
very interesting and very valuable. And yeah, so it looks like Rachel's rocking that. So Craig, so I'm just reading, remember we're live on Craig'sMidAtlanticTV.com. So I'd add Corona COVID-19 the title of your video to market it better. This video is going to be very useful. So thank you, Triforce Rich, for saying that comment. So yeah, I mean, it's always a pleasure to have Jeremy on. He is, like I said in the beginning, a plethora of information. He's my go-to. Even when we butt heads sometimes, I still will trust him.
You and I butt heads? What do you mean? I thought.
I mean, you know.
I
So no, I mean, he always has some type of valuable content to share.
I try to get in your good graces all the time. I'm just always impressed at how hard you and the folks over at Smith Partners work. I appreciate your professionalism and always dealing with some of our clients, because they can be challenging at times, but it's the reward of sitting there and seeing everybody's faces.
You and I have the best clients.
I understand, and we overcome challenges for them, and sometimes it gets to be a little bit stressful. So if I've ever gotten on your nerves, understand that it is just for the common good of making sure our clients get to the table in a timely fashion with the least amount of stress.
No, you're definitely good, and you're still batting 1,000 in my park. So with that said, guys, if anybody has any questions, feel free to reach out to us. Jeremy, how can they reach you if they have any type of financial mortgage questions or anything else like that?
So office is right now not open for foot traffic coming into the office. We are located in Newmarket, Maryland. You can find me at www.jeremyspolling.com, 301-676-5506 if you have any questions or calls. Of course, Rachel obviously has a direct line into me. So if you're going through your consultation with Rachel, let her know that you may need to, seek some help from a mortgage originator. I'd love to help.
Yep, absolutely. So thank you so much for tuning in, everybody. Feel free to comment if you have any questions after this live that we can make sure we answer for you. And JP, thank you so much for coming on, and I will talk with everybody soon. Thanks, guys.
Okay.
All right.
Thank you for having me.
You're welcome. I'll talk to you soon.
Bye.
Bye, everybody.